Dollar is trading with a soft tone today as traders are cautiously waiting for tomorrow's job report. And just like how it was in recent months, wage growth will be more important than the headline number. For now, yen and New Zealand dollar have stolen the spotlight as both surged strongly. In particular, yen is taking advantage of data disappointment in Eurozone and UK and jumps sharply higher against euro and sterling. Risk aversion could also be a factor as US stocks are set to open lower. Gold also manages to bounce back to $13.15, partly thanks to dollar's consolidation. U.S. trade deficit narrowed in general, but widened against China. U.S. trade deficit narrowed to minus $49 billion United States dollars in March, down minus $8.8 billion United States dollars from minus $57.7 billion United States dollars in February. That's also the lowest monthly deficit in 6 months. March exports rose $4.2 billion United States dollars to $208.5 billion United States dollars. Imports dropped $4.6 billion United States dollars to $257.5 billion United States dollars. Trade deficit with China, however, rose $0.7 billion United States dollars to $35.4 billion United States dollars in March. Exports to China rose $1.6 billion United States dollars to $12.4 billion United States dollars, but imports increased more by $2.3 billion United States dollars to $47.7 billion United States dollars. Also, it should be noted that year-to-date, trade deficit widened minus $25.5 billion United States dollars, or up 18.5% from the same period in 2017. Initial jobless claims rose 2K to 211K in the week ended April 28, below an expectation of 225K. The 4-week moving average dropped 7.75K to 221.5K. Continuing claims dropped 77K to 1.756 meters in the week ended April 28, the lowest since December 8, 1973. Also released, U.S. non-farm productivity rose 0.7% in Q1 while unit labor costs rose 2.7%. Canada trade deficit widened to minus $4.1 billion Canadian dollars in March. UK PMIs take both fingers firmly off rate hike trigger. UK PMI services rose to 52.8 in April, up from 51.7 but missed consensus of 53.5. Markets' key findings are not too encouraging for the UK. It noted that business activity rises at subdued pace in April. There is the weakest upturn in employment since March 2017 and inflationary pressures are moderate. Chris Williamson, chief business economist at IHS Markit, noted that the 3 PMI surveys collectively showed only a muted rebound in business activity after the heavy snow in March. And failing to regain February's growth pace suggested deterioration in underlying performance. The surveys pointed to GDP growth at around 2% at the start of Q2. And the disappointing services data will add to expectations that the MPC will take its finger firmly off the rate hike trigger. Any further slowing will also raise questions as to whether the November rate hike may have been ill-timed. Eurozone CPI missed. ECB prot sounded cautious. Eurozone flash CPI slowed to 1.2% YOY in April, down from 1.3% YOY and missed expectation of 1.3% YOY. CPI core performed even worse, dropped to 0.7% YOY, down from 1.0% YOY and missed expectation of 0.9% YOY. ECB chief economist Peter Prot said 2 hours after the CPI release that while the central bank cannot yet declare mission accomplished on inflation, we have made substantial progress on the path towards a sustained adjustment in inflation. But Prot also acknowledged that the latest economic data and survey results have generally surprised to the downside, suggesting some loss of momentum in economic activity. But he pointed out that temporary factors may also be at work. He emphasized that we will also need to monitor whether, and if so, to what extent, these developments reflect a more durable softening in demand. Australian dollar lifted by large trade surplus and surge in building approvals. AUD trades broadly higher today as supported by solid economic data. Australia trade surplus came in at 1.53 billion Australian dollars in March, widened from 1.35 billion Australian dollars in February. That's also much larger than expectation of 0.68 billion Australian dollars. Exports jumped 1% to 34.84 billion Australian dollars, with strong 8% growth in non-monetary gold to 131 million Australian dollars. Imports rose 1% to $33.31 billion Australian dollars. Non-monetary gold imports jumped 28% to $232 million Australian dollars. Building approvals rose 2.6% mom, much higher than expectation of 1.0% mom. Justin Lothorst, Director of Construction Statistics at the ABS, noted that the strength in the total dwelling series is being driven by approvals for private sector houses, which have now risen for 13 consecutive months. And private sector house approvals are now at their highest level since 2003, in trend terms. USD, JPY midday outlook daily pivots, S1, 109.61, P, 109.82, R1, 110.05, more. USD, JPY's sharp decline and break of 109.50 minor support indicates short-term topping at 110.02, on bearish divergence condition in 4-hour MACD. Intraday bias is turned to the downside for deeper retreat to near-term channel support, now at 108.48. But we'd expect strong support from 38.2% retracement of 104.62 to 110.02 at 107.95 to contain downside and bring rebound. Break of 110.02 will resume the rise from 104.62 to T61.8% retracement of 114.73 to 104.62 at 110.86 next. In the bigger picture, break of 108.12 support turned resistance now suggests that corrective fall from 118.65 2016 high has completed with 3 waves down to 104.62. And rise from 98.97 2016 low could be resuming. Focus is back on 114.73 resistance, and break there will pave the way to 118.65 and above. This will now be the preferred case as long as USD, JPY stays above 55-day EMA, now at 107.97. Economic indicators update. GMT/CCY events actual forecast previous revised 130 AUD trade balance MAR 1.53 B 0.68 B 0.83 B 1.35 B 130 AUD building approvals MAR 2.60% 1.00% minus 6.20% to 4.20% 830 GBP services PMI April 52.8 53.5 51.7 9 o'clock Eurozone PPI MR 0.10%, 0.10%, 0.10%, 9 o'clock Eurozone PPIY, YMAR 2.10%, 2.10%, 1.60%, 9 o'clock Eurozone CPI estimate Y April 1.20%, 1.30%, 1.30%, 9 o'clock Eurozone CPI core Y April A 0.70%, 0.90%, 1.00%, 9 o'clock European Commission economic forecasts 11:30 USD challenger job cuts Y April minus 1.40%, 39.40%, 12:30 CAD international merchandise trade CAD MAR minus 4.1 B minus 2.0 B minus 2.7 B minus 2.93 B 12:30 USD non-farm productivity Q1 P 0.70%, 1.00%, 0.00%, 12:30 USD unit labor costs Q1 P 2.70%, 3.00%, 2.50%, 12:30 USD initial jobless claims, April 28, 211K 225K 209K 12:30 USD trade balance MAR minus 49.0 B minus 55.6 B minus 57.6 B minus 57.7 B 1345 USD US services PMI April F 54.4 54.4 1400 USD ISM non-manufacturing services composite April 58.1 58.8 1400 USD factory orders MAR 1.40%, 1.20%, 1430 USD natural gas storage 18B